Australia's cranes are working overtime, with the Bureau of Statistics saying the value of residential work done reached more than $16.5 billion in the March quarter. That is a near 6% increase on the same time last year. But are we headed to an oversupply? And what about properties up for sale right now? Potts Point is one of Australia's most densely populated suburbs. Space comes at a premium, making the most of what's available essential.
Got storage underneath the bed.
At 27 square metres, you'd need every inch.
It's very light, it's very open, it's not very claustrophobic or anything like that.
It's currently rented at $440 a week and goes to auction tomorrow.
I'd say 80% of them are investors.
This apartment was sold pre-renovations in 2011 for $295,000. After the modifications, it then sold for $405,000 in 2013.
Guide's been somewhere between $420 and $460.
It's not for everyone.
Historically, financiers haven't been that keen to lend against micro apartments, which should tell you something. It's generally a good idea to buy something with broad appeal, and particularly at this stage in a construction cycle.
With about 200,000 new dwellings coming onto the market this year, there are alternatives.
We're looking at some looming pockets of oversupply. That said, if Australia is going to successfully grow its population by 3.5 to 4 million people per decade, we're going to have to get used to the idea of constructing more apartments.
Like the Reserve Bank Governor warned yesterday, economist Paul Dales says prices can fall.
I'm not at all suggesting that Australia is going to suffer from a US-style housing collapse.
But he's expecting declines in 2019 and 2020 as official interest rates rise, catching many interest-only borrowers, who form 40% of the market, off guard.
Those people are going to get quite a shock because they've been used to servicing their mortgage at record low cash rates.
For now, though, most economists predict interest rates have further to fall.